the very best thing that you can do is trade unemotionally, invest unemotionally, and just go with what price is saying, because only price pays. My name is Christopher Yule. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where we save time, make money, and start winning with less risk together as a team. Now let's get into the lesson of the day. All right, so be sure to stick around to see how we rank this video out of 10, and of course, subscribe if you haven't done so already. So this video is called, Will SoFi Crash on Earnings, January 27th, Honest Truth, by the Stock Goat channel. Now, we've covered lots of videos from Kyle before. Kyle is a big SoFi pumper. He's very, very, very long biased, very, very bullish on the stock, and it has had a tremendous run lately. So I'm very curious to see what Kyle has to say.
It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the SoFi stock. We just opened up the markets finally this week after Trump has finally got into office. And guys, it was an absolutely insane day for the SoFi stock. One of the best performing stocks in the entire market today, guys. You can see as soon as Biden, stepped down, that student loan headwind has finally been removed because they did, 10 to 15 student loan.
And that headwind that he's talking about there was something we were watching for a while, was the order blocks that were sitting on top that were created back when price was at 1750-ish or so. And if you remember, if you watched any of the previous videos we've covered on this, those order blocks are gone now. So that overhead resistance is gone. So I'm actually very bullish SoFi, very bullish. I was cautiously bullish on this date here, January 15th. Day after that, it started to really run, and now it's running up into earnings. Now, I've mentioned this before. This is one of my favorite plays here, leading up into earnings. And what I want to do real quick is talk about how I would work this around earnings. Now, this is my style of trading going into earnings. If I'm in a trade, is it already profitable? That's the first question I have. Am I already making money on the stock leading into earnings? If the answer is yes, the second question is, does the expected move break the trend line for earnings? Well, I'm going to show you how to calculate that expected move real quick. Give me just a second here. I need to log into my broker account, which I forgot to do ahead of time, so forgive me for that. But the expected move is what the market makers are saying the stock could move up by this much, or the stock could move down by this much. And okay, I got to type it in. So that's geez, hang on. There we go. Okay. There we go. Okay. Yeah. Forgot the password there was toadstool 6969 420 laser sharks, but that's loading in right now. So let's go to the SoFi options chain. I'm going to teach you exactly how to calculate the expected move. Okay. So this is one of those note-taking lessons. Now, I'll tell you, this expected move is probably going to be a lot. Probably going to be a lot, especially given the fact that the price has gone up. Since it sold off, it went down 20%, and then it's gone back up 30%. These are bonkers moves, right? So let's see how we calculate the expected move. So let's go to SoFi. The way that you do this, and I'm gonna make this bigger for you, is you go to the most closest, I know I said that wrong, the most closest expiration to earnings. Earnings are on January 27th. So we need to go past the 24th onto the 31st. You go at the money. So at the money right now, it's going to change if it does continue to move like it is. So you would price out by buying a call and buying a put. Now, that's what we call an at the money long straddle. I don't ever trade these. I don't want you to ever trade these, but this is where we get the expected move of the stock for earnings. Okay. So we start there and we say, okay, 85% of this price is what the expected move is. So we take 263. And I don't know where the 85% came from. That's just what I was taught. So 2.23 is the move. And that's greater than a 10% change in the stock price. Okay. So they're saying it could be as much as a $2.23 dollar move either way. So what we're going to do now is we're going to go onto here, remove all annotations. Let's go 223 up. Right there. Let's go 223 down. right there, give or take. Okay, cool. So this is the range that they're saying price could move from earnings. That doesn't mean it will. So this is what I'm trying to tell you is expected move means most likely it could go up or down by that much. Now, as we know, anything can happen with earnings. Anything can happen with earnings. It could absolutely blow this out of the water, or it could absolutely get destroyed. We don't actually know what's going to happen here. Earnings are definitely a gamble. Even in OVTLYR, right? We cover SoFi in OVTLYR. It does have that buy signal that came on December 19th. So from December 19th, close there to now, it's up 19% since that buy signal in OVTLYR. So really good signal on that one there. And if we look at the fear and greed map down here, the behavioral heat map, you can see people are definitely getting more greedy on the stock, which is something that I want to see, right? Once it gets to a point where that peaks and starts coming back down, that's where I want to get out. But it is getting more and more greedy. The sector is getting more and more buy signals. The sector is getting more and more heat maps that are showing to be greedy as well. So, I mean, I'm bullish all around with SoFi. Very bullish all around. I don't have a position in this because it's not set up in my my style of trading, but I'm very bullish in SoFi. So that's what the potential move could be, right? We could be looking up to $20, could be looking down to 1563. So back to the way that I trade. Does the expected move break the trend line? So I like to follow the 10 period moving average, which is right here. And let's remove these again. It would break that trend line, right? It would. So now, of course, we got a whole week for this to figure itself out. So it's going to change a lot between here and there. But if you're following the 10 period moving average, and that would be breaking that trend line by the expected move, now may be the time to get out leading up to it, right? I mean, I will hold it all the way up to the day of earnings and then get out. So is the trade already profitable? If yes. Does it break the expected trend line? If no, then I would hold through earnings. I wouldn't hold otherwise. But if you're holding it and you're looking at maybe the 50 period moving average or the 20 period moving average or something else where it doesn't break that, then it would still fit in the way that I like to trade. So just giving you a heads up, that's the way that I would trade this. I don't have any skin in the game. I don't have a position in SoFi, but I can absolutely see a very bullish case for SoFi right now.
Loan extensions, over the past 3.5 years. And now SoFi is going to have that as a revenue boost coming up. But the best part is SoFi has already transitioned out of student loans years ago. Okay. This company is so misunderstood on Wall Street, and they have so many additional revenue streams that are going to be coming in hot, specifically that loan platform business that they just seen, break into $60 million revenue range inside of Q3. This loan platform business has unlimited scale depending on their partner's appetite, guys. They can literally scale this business from 5 billion, 10 billion, 15 billion in literally a year or less if their partners decide to take on the risk. So guys, we have massive upside in the SoFi stock heading into this Q4 earnings. The Q4 earnings is going to be on the 27th. That's literally 3 trading days away from where we are right now. We are going to be live streaming that earnings for you. It is going to be absolutely insane, guys. We're going to be going around 6 a.m. So set your alarm clocks, guys. Be up real early because it is going to be a massive, massive show. And once again, guys, I believe SoFi is going to beat the Q4.
I don't think I've ever had a stock that I was excited about as Kyle is for SoFi. But just keep in mind, right? Earnings can rock a stock both directions, right? We can have the absolute most bullish case out there right now. We really could, and we kind of do. But that doesn't mean that it's going to rocket ship higher. Honestly, it may just falter, right? In fact, Mahesh, our CEO, was telling me the last time NVIDIA had earnings, he's like, Chris, I want to buy that long straddle you talk about. And I'm like, why? He goes, I don't know which way it's going to go, but I think it's going to rocket ship one way or the other. And it kind of just like faltered, right? It kind of just faltered. It didn't do a whole lot, right? It didn't have one of these moves coming off of earnings. It just kind of went sideways. So just be prepared, right? If you are going to be buying options on SoFi, you're going to be paying a buttload for them, okay? So let's say that your long calls, you're going to be paying $1.53. So the only way that you make money on this is if it goes $1.53 over 17.50, which is 17.5 at expiration. It's got to be greater than $19. And there's every chance in this case that it could happen, but I don't really know, and neither do you, which direction it's going to go. So just keep that in mind.
earnings pretty easily. Our revenue guidance is about 675 on what analysts on Wall Street wants. I think we're going to come in over 700 million, and also EPS is at the 3 cent range. I believe we're going to come in around the 6-7 cent range. So it's going to be a nice double beat on the Q4 earnings. But where we went wrong is what happened 12 months ago at the exact same time we put out that Q4 2023 earnings, and the SoFi company, the management had to back off due to macro, and you saw them put.
He reminds me of, I don't watch sports at all. Like I don't even know who's in the Super Bowl or when the Super Bowl is, right? Somebody was showing me the Commanders versus, I don't know, whatever team. And I was like, I thought they were the Washington Redskins. And they're like, bro. I was like, I know, I don't watch sports. But he reminds me of when people talk about sports, they're like, oh, we did this and we did that. We beat this team. We beat that team. We are going to the Super Bowl. And it's like, are you on that team? Are you on the Commanders team? Are you on the Cowboys? Right. So yeah, he's so excited about this, and I love that for him, his passion. But when people get excited about stock, they throw all risk control out the window, right? The very best thing that you can do is trade unemotionally, invest unemotionally, and just go with what price is paying or what price is saying, because only price pays. I'm actually going to get that put on a t-shirt, and it'll be down in the YouTube merch shelf down below. Only price pays. So you can be as excited as you want to be, but at the same time, you've got to have that risk control. Got to have that risk control in price.
Put out a weak revenue guidance, and the stock collapsed, and we also sold off at the first 6 months of 2024, and then they got their groove back, and you saw growth start to accelerate. Guys, management does not have time to go soft, conservative on this upcoming Q4 earnings and 2025 guidance. Okay, they have massive compensation bonuses that they need to hit, specifically the $45 level in mid 2026. These guys got to come out swinging. They have to put their foot on the gas, come out aggressive, and I believe that's what they're going to do. Analysts on Wall Street right now are predicting 18% revenue growth for 2025.
Let's look at the analyst ratings real quick. So if we go over here in Outlier, pop this open here, you can see analyst ratings here 15th, about a week ago. William Blair put it to outperform, very bullish there. But just about a month ago, Bank of America Securities went from neutral to underperform with the price target of 12. So analyst ratings I've got so far, there's one bullish one. The rest of them are not all that great, and they're a little bit out of date too.
We need to see SoFi come in and absolutely destroy that number. You can see with the stock ticking up today that it looks like the market is bracing for a really good quarter. Well, guys, we cannot put up around 18, 19% growth.
I would like to point out, right, there's the old adage to buy the rumor, sell the news, right? You probably heard of that. Buy the rumor, sell the news. Let's do some image searching right here. Buy the rumor, sell the news, right? This is not uncommon for stocks to run up into earnings, which is why I'm all about, right? The rumor starts. Speculative buying for prior to the event, earnings, news release, whatever, and then speculative traders exit the position here. That could absolutely be about what is about to happen with SoFi, especially going up. What is that? Wasn't it like 30%, 31% right here? This feels very much like it could be a buy the rumor, sell the news type of event. That doesn't mean that it's going to crash. Doesn't mean it's going to go to the moon either. Just keep that risk in check.
For the guidance for 2025, because Wall Street is already bracing for that, and we're likely going to sell off, pretty aggressively. We need to have a blowout 2025 guidance. Anthony Noto, CEO and management, has said they got wind at their back, best macro in 7 years. This may be the quarter that SoFi finally breaks out and never comes back, guys. We are literally like $10 away from all-time highs in company history. That's $28 specifically. We already broke $18 level today, and guys, there's a couple short-term levels that we can, show you guys today. That's a little bit exciting for the next couple of trading days, but I think, we are going to be heading into this upcoming earnings around the $18, $19 level. And if we get a blowout, we see the loan platform business accelerate, origination expansion to the $2 billion range, which is doubled, maybe 100+ million in one quarter for Q4. We're going to see this stock really start to move. So once again, guys, I believe the management is going to, blow this 2025 guidance out of the water. We are going to see this stock rip up to all-time highs. So be sure to smash the like button, drop a comment. Don't forget to subscribe to the channel. We're going to be keeping you updated daily. Let's get into the video. All right, guys, you can see the SoFi stock today finished at about $7.90. We hit highs today of around $18.08. So a really, really big tick up as soon as Biden left office. I told you guys specifically in my video yesterday that the student loan headwinds was going to be removed, and that's what I believe is really getting the stock moving right now. It's not really Trump moving into office or anything like that. SoFi also doesn't offer crypto right now. I think it's the student loan headwind that's really getting this stock cleared up.
What student loan headwinds are we talking about here? I don't know. I mean, last I heard was student loan, and please tell me in the comments because I honestly don't know. Last I heard, Biden was like doing his very best to eliminate as many student loans as possible. That was one of his campaign promises, and he would trickle these out and tease these out here and there. But what student loan headwinds would be gone now that Trump's in office? I don't actually know.
up, for more upside. But we already know that SoFi has already pivoted away from student loans. Wall Street has misunderstood the stock and doesn't understand the wide diversified revenue streams that are about to come in and start to accelerate, specifically loan platform business and also their tech platform, Galileo, which is merged with Technisys, 2 years ago. They've been in RFP stages with top 10 legacy financial institutions, and there's a chance that they have likely landed one large top 10 player, and I believe that player is going to be announced soon. If you don't see an announcement, you will see the numbers on the revenue guidance for the tech platform, guys. This is what they've been working on for the past 2 years. I believe Anthony Noto is a closer, and I believe he has closed a top 10 legacy bank. This is exactly what we're talking about, guys. You keep hearing this $45 price target thrown around. This $45 price target is extremely serious. For anybody new to the channel, you need to see this right now. A lot of people that have been following the channel have already seen this. Here is management's bonus compensation packages at the $25 level, $35, $45 level. We're trading at $18. This bonus compensation expires in mid-2026. You have Anthony Noto, CEO, $53 million at 25, $75 million at 35, $96 million at 45.
Listen, if somebody told me that I'd make nearly 100, no, it's cumulative. I thought it was once they reach that point, cumulative, over $250 million, bro. I mean, I'd be like going full Dr. Evil on these people, right? Like, how do I make sure that that happens, right? If I need sharks with laser beams, or if I need preparation H to blow up the moon, whatever the case is, I'm doing what it's going to take to get to my $300 million compensation there. So I definitely, absolutely see how an incentive structure like this is going to really push people to make things happen, right?
Cumulative $289 million. And also you got Crystal Point, Derek White. This management right here, Gil has left, so she's not part of the package right now. So it's just the other three right now, Noto LaPointe and Derek White. So guys, you can see these guys are focused for 2025. They cannot do what they did last year, which was the soft guidance, worrying about macro. Okay, 289 million, 37 million, 33 million. These guys want to get to the $45 level by mid-2026. I believe that they're going to be in full force growth mode. And there's a possibility we could hit that level inside of 2025 this year, guys. I'm telling you right now, management is going for it. They're about to go for the home run. This is going to be a blowout earnings. I think 2025 guidance is going to be out of this world. All right, guys, not only do you have a SoFi stock that's moving up, but you also have an undervalued fintech play right now. If you look at Hood, price to sales, they're trading at 18.5x. Well deserved.
Just want to put this out there. Price to sales is a absolutely meaningless, pointless number. Doesn't matter at all. Why would it matter, right? To a fundamental investor, if you want to value it in whatever way seems fit to you, by all means, you do you. But only price pays, right? Who cares what price to sales is? If it's going up, right? If the price is going up, if the line is going up, let's go to Robinhood since that's the first one there. If the price is going up like this, that's the only way you get paid as an investor. The only way you get paid is if the price is going up. So the PE ratio, price to sales ratio, whatever other ratios and metrics you want to come up with mean nothing. Absolutely nothing. Your valuation of the stock means nothing. I don't know how many times I watch these videos and somebody's like, oh, I'm going to value the stock at $26, of course, with like a 50% gain and where it is right now, because they're super bullish on the stock. But it's like, all that matters is price. If the price is going up, you'll get paid. If the price is going down, you're going to lose money. And I know you're thinking, oh, but Chris, I'm a long-term trader, or I'm a long-term investor, right? So is Warren Buffett. You know what his two rules are? Number one, don't lose money. Number two, refer to rule number one, right? And that dude's been around since like dinosaurs ruled the earth, right? So if he understands that only price pays, maybe you should too.
Net income profitability over 700 million. Upstart 10.6x, still unprofitable. Has a loan platform business, uses AI, but has higher risk than SoFi. SoFi trading at 7.8x. Price of sales, $2 to $3 lower than Upstart right now. We should probably be at around $20, $22 right now. And also Affirm, guys, 6.9x. Still unprofitable massively. So you can see right now, I believe SoFi is the most undervalued stock. Looking at these other fintechs, and I believe we should be higher than Upstart, more like 11, 12 times sales. Heading into the fifth straight quarter profitability, full year profitability. Galileo Tech.
See what he just did right there? I feel like we should have a more price to sales ratio than these others, right? Again, those targets, those metrics, those numbers right there, they're meaningless. They just don't matter, right? They just really don't.
Platform, unlimited upside, hasn't shown any growth at all. So guys, SoFi stock can go a lot higher from here. You guys already know, all-time highs, $28. And take a look at this post I put out, last night. I said, honest truth, the options chain after the 1 million open interest expiration last Friday is pointing to massive upside.
All right, listen. I love options. I am an options guru. So I'm very curious to see what he's going to talk about here. So let's pull up the chain again. Let's go to open interest, right? We got tons and tons of open interest all over the place, right? We've got I can't even math that out there. 2, 4, 5, 4, 7, 4, 9, 4, 6. I mean, that's probably 50,000, maybe more. No, definitely more than 50, 100,000. And then you've got probably 200,000 on the side in open interest, right? These are people who are actively trying to make money on the trade, right? I don't look at volume. I haven't found volume to ever be really that realistic. I look at open interest. Who wants to trade with me? That's what I want to find out. And there's so much to this. I'm curious to see what he has to say about this.
Out of this world. I put this out before the market opened, okay? The options chain open interest is so minimal, even for the next 4 weeks. It looks like the fear and greed index really scared a ton of retail out of the markets the last 2-3 weeks. Yes, I do see January 31st options next week open interest pump into around 200,000, but that's still low for earnings of this magnitude. Full year profitability with a potential Galileo whale on the horizon. I think this is where institutions finally let it go and take it to the moon. Q4 predictions, triple B with 25% growth rate plus for 2025, well ahead of analysts on Wall Street, 18%, 2250 next week. We're halfway to my $45 price target within 11 months, guys. Look at the options chain, okay? It really come down for the next couple of weeks. 100,000, 100,000, 40,000, 20,000. You may see this earnings report right here on the 31st. That's next week. Pump up to around 200,000. That is still fine, guys. A lot of people have been wiped out inside of the market the past month, okay? A lot of scary, Fed talks about interest rates and stuff like that. So, guys, options chain is looking very limited. You're going to see it pump up a little for, Wednesday, Thursday, and Friday. But, guys, remember, once the weekend hits, we're going to be having our earnings in the pre-market. That's no more open trading days. The options chains will be closed. So, guys, I think we're going to go a lot higher for next week. 2250 is my price target. After earnings, I think we're going to get the blowout. And take a look at this, guys. I said SoFi lost 50% of their student loan business and 100% of their crypto business under the previous administration. Guess where it's headed under the new administration? Bet the farm. You already seen first day we opened. As soon as Biden stepped down, the student loan headwind really removed. The stock's up 9% today. Okay, and you can see we had this, little bit of a resistance level at $17.20, and we have broken that today, guys. Going over.
Oh yeah, for sure. And that's what I was mentioning earlier on that order block there. That order block's gone. That's been there for a long time. I'm impressed that he came to that same level as well. I don't know how he got there, but those order blocks are tremendous. Maybe he watched our video and found that.
For $18, and you can see the all-time high right here is 28.10. So this was the resistance right here. We hit it a couple of weeks back, pulled back to like mid 13. So 1720 was the level we were watching, and you guys can see we now have a new level.
There are no more order blocks overhead. Oh, wait, I have them turned off. Duh, Chris. Oh, look, I had turned them off yesterday. I was doing something, and oh man, I feel so stupid right now. Actually, we are still sitting in that order block. We are still absolutely sitting in that order block right now. Man, I'm glad I saw that. Okay, so here, this gives me a warning. This is one of my exit criterias. If this is exactly one of my exit criterias, man, I almost ruined this whole video for you. I am no longer, for me, I would be getting the hell out today. Why would I get out today? Let's, here. One of the things that I do, now, this is the only time I day trade. The only time I day trade. Everything else I do position trading for, a couple weeks at a time, whatever it takes. If a stock goes up into an order block, so that starts right here. If it runs into an order block, I exit. And then I will trade out of it during the day, right? Let's imagine that this is the order block here. And the trend, the intraday trend on the 5-minute chart doesn't cross back down. I'm great to hold it until the end of the day, but I want to close it by the end of the day. If it goes up and then comes back down and you get that crossover back down, that's when I would be getting out intraday. So this is exactly my exit point today, right now. So I take that back. I'm no longer ultra bullish. I think what you're about to see happen is and I could be wrong. And that's the thing. Hear me out. Being a trader, being an investor is being okay. Being successful trader or investor is being okay with being wrong, not getting emotional about it. And if you're wrong, just get out, right? Take the tiny loss and wait to hold the next one until it runs. This right here, this overhead resistance could smash this back down. Could, may not, but it could. So for me, I'd rather not take that risk and I'd rather get out right now. Boy, am I glad that I saw that.
That we are watching. Short sellers better not let this break the 0.618 Fibonacci at 1903. Dear Jesus, this could get ugly.
I hate some fibs. I don't know why people even talk about it. And it's funny to hear him like throw in all these technical trading terms that he probably knows no idea about because he doesn't care. He just wants to buy SoFi forever, right? So why are we even talking about that?
Quick, a short squeeze to all-time highs could come fast, guys. So 1903 is a level we're watching in the short term. This could potentially happen maybe by Thursday, Friday before earnings. But guys, if we're hovering around the $19 level, heading into a blowout Q4 with an increased 2025 guidance, smoking analysts out of the water, and potentially getting a Galileo tech platform that's the cherry on top, a massive deal with a legacy bank. This stock could go to all-time highs in an instant, guys. $28, no problem. Okay,
it could. So my final takeaway on this is, if I were holding this, I would have gotten out on this candle right here. Specifically, that's part of my rule set. If you don't have a rule set, you need to develop one. You can always follow along with my trades, but I haven't traded since November 21st was when I got out of the market. Most likely we'll be getting back in later this week. It looks like the market's really starting to get a lot more bullish overall. And that's good because it's been, it's basically flat since November 21st with some overhead resistance right here. So I have to see. But to that point, I would be getting out of SoFi ASAP because this overhead resistance right here are large institutional orders waiting to be filled, and they will be filled. Right? That doesn't mean that it's going to pop right over this. Doesn't mean that it's going to crash, but this absolutely can be overhead resistance, and I don't want to be running into overhead resistance when I trade. So let's do this. Let's rank this video. Let me go to that slide here. Let's rank this video. Where would you give a video ranking on this? He's not going to get a 7. Nobody gets a 7. And definitely not an 8 video. I'll put this at a 5, right? I feel like he's definitely brought his receipts. He's obviously super excited about the stock. He's very, very bullish on the stock. But I'm gonna give it a 5. Right? I don't feel like I'm leaving knowing that much more than I did when I first came in. Other than Kyle is just like the biggest SoFi bull ever. So tell me in the chat what you're trading. I'd really love to hear. And of course, come back tomorrow, or I'll help you save time, make money, and start winning with less risk together as a team here in the OVTLYR Trading Room. Have a great day. We'll talk soon.